Thank you very much. Christina, thank you so much for your persistence in getting me here. You're one of the few persons I know that pick up the phone in the first ring. And that's rare these days. Again, my name is Entr. I've been in the financial service industry for almost 30 years. 15 years of that in commercial banking under various capacities, and 15 years doing profitability studies for banks around the world. So I've been involved in this industry for a long time, and I've seen a lot of different situations that we've had to go through and adapt to. We're currently in a difficult situation, and that financial environment that we currently live in is a challenge, particularly to access capital. But capital is available. Small business dependent on credit need to be very, very prepared in addressing that need and have a better understanding of the credit markets. I mean, there are lots of different alternatives out there for funding. Naturally, commercial banks typically, they play a vital role in making capital accessible to small businesses, and they will, for the most cases, give you the best terms and pricing, and that's particularly in mind because we use prudent lending standards that are used basically to match up to the most credit-worthy borrowers with solid business plans. The truth is, nobody really likes to borrow money, but when you need it, I mean, you really need it. And unfortunately, a lot of businesses maybe wait too long to set up credit facilities and have those in place so they're there when they need them. Really, the best time to apply for credit is when you don't need it. That I don't think can be more true today, given the environment we live in. To have access to capital, you must have cash flow. All commercial lenders, the first thing they look at is cash flow. I mean, cash is what repays the debt. Cash is what services the debt. And banks aren't. We're not in the business of taking over properties or in the real estate business or anything like that. We want to make sure that the loans get taken care of through the business. The problem with cash flow is a lot of small businesses don't often have the time to study or analyze their cash flow. Cash flow isn't something that you look at on a quarterly basis and try to assess your situation in that manner. Cash flow is really a daily situation that must be understood and addressed. There's really no faster way to kill a business than to ignore cash flow issues. So if you need help managing your cash flow, you need to talk to your banker or financial advisor, or someone that can give you some guidance in that. It's all about having information, being able to pinpoint your cash position on a daily basis. Banks, we're all business-minded, particularly banks like PNC and most other commercial banks. We're more than happy to sit down with you, discuss your cash flow, and after all, it's in our best interest to keep your cash flowing and you in business. We have a long-standing tradition of working with women business owners. In fact, since 2005, we've lent nearly $7 billion out to women business owners to help them expand their business and to address their financial goals. We have over 500 PNC business advocates that are specific toward the women segment, and they understand the challenges and opportunities that the women in business face. We've already heard that's one of the fastest growing segments in business, and we are there and prepared to serve that in a very proactive manner. A couple points that I think are important in accessing capital, particularly through a commercial bank. And if I may note to our SBA partners, the SBA has been tremendously supportive and has addressed access to capital of small businesses in a way that we've never seen before. I think it's really to their credit and the partnerships they have with commercial banks that have provided capital to many small businesses. I said before that commercial banks offer the best terms. In most cases, they do. SBA loans, for that matter, they will give you longer amortization for lower payments, lower or higher loan-to-value ratios. They make it very easy, I think, for small business owners to address their capital needs. We all know there's nothing more important than cash flow and having working capital. It is the lifeblood of a business. So in order to address, your credit needs, you really need to have a business plan, and it's better if it's specifically designed to address to outside parties, people that aren't really familiar with your business, people that, when they read your business plan, can get a good handle and understanding of what it is you're doing, what your market is, what your initiatives are, who the players are, what their expertise is. Bankers are all about information. The more information you can provide a banker, the better it is. They're going to ask you for tax returns, usually 2 to 3 years, personal as well. There's a lot of talk about banks not lending because maybe they're tightening up their credit standards. They're protecting themselves. We're all about risk. That's true. But the fact of the matter is that in fact, I can talk on behalf of PNC. We have not tightened up our credit standards. In fact, I talked to one of our credit managers recently. They said we've loosened them in the past couple of years. What's happened is the conditions to lend aren't there. Okay, most business loans are secured or collateralized by real estate. What's happened to real estate? Well, it's taken a dive. So if those values aren't there, and then it's difficult to obtain the capital that you need. So it's not so much the guidelines or the standards that we use to underwrite credit. It's the conditions of the market that had caused us to not lend as much as we'd like to. We're doing everything we can. Federal government is doing everything they can. Recently, they put out a funding initiative to the Treasury, providing additional capital, similar to the TARP fund they provided a while back to the largest banks. This is more geared towards smaller banks. And it's all in an effort to get capital out there for businesses to access. So understand, what the credit markets are doing, understand the alternatives, always have a contingency plan, and never be discouraged. There are, ways to access capital. It may not be the most cost-effective for you, or the terms may not be exactly what you would like. But if you really search out, you will obtain the credit you need. Again, we have worked very hard with the SBA, and we'll continue to work hard with the SBA. I had invited one of our SBA specialists from the bank to be here today. Unfortunately, she couldn't. Again, be prepared. Information is key. If you have, pro forma or forecast or a budget or what your business is supposed to do, take the time to match that and see how your business is actually performing. Are you on budget? Are things, the way you expect them to be? Be prepared to answer any variances in your business. If sales are up 20%, you need to know why. If sales are down, you also need to explain that. No surprises. Bankers hate surprises. They want to have everything up front. We're going to look into everything. We do the DNB reports. We do the credit reports. If there's an issue there with your credit, whether that we're going to run into, let us know. Be proactive about that. We are very interested in lending, very interested in working with small businesses. Last year, PNC did $3.5 billion in loans to small businesses. The numbers that we're looking at now look to exceed that. We're seeing more credit demand and better quality credit demand, which is a big indicator of where we're heading. A little slower than originally, I think, thought, because at the beginning of the year we thought that things were going to improve, and here we are going into August, and it's still lagging, but I think it's heading in the right direction. So I know we're going to save the comments and questions when we're done. Since we're talking about access to credit, I'll tell you a little story about a woman that went to her banker to borrow money. And this woman had been a customer of the bank for many years. She had been a very good customer, always handled all her accounts satisfactory, never had any issues, always paid her credit on time, was a very good customer. She got into some tough times, family, medical issues. She got a little behind on some payments, needed some additional money. Went to talk to the banker, the president of the bank for that matter, and said, you know, I need a little bit more money, I'm a little behind, this and that. He says, you know, given the situation and, you know, the adverse conditions that we're looking at, we're not going to be able to do it. She was distraught. So finally, you know, since she had been such a good customer, he looked at her and he says, look, I have a glass eye. If you can tell me which one of my eyes is made of glass, then you can have the loan. She goes, okay. So she looked at his eye, and she looked at his eye, like that. She goes, it's the left one. The left one is made out of glass. He goes, how did you know that? She said, I saw understanding and compassion in that eye. That's an old banker's joke. You know, the truth is, you know, we're not that way at all. We do want to work with you. We want to help you in every way we can. But sometimes the reality of the situation and the conditions of the market, you know, we are a business. We are looking to work with you, but you know, sometimes it's just not the point. So, anyway, it's good to be here. Thank you, Christina, and.